when do you want to own silver? You want to own silver when inflation is running hot and it's a company with global growth.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. As we continue on in the trading week, and quite excited, as you can see over on my left, there is Michael Pento, who's joining me today. He's going to share his silver forecast for 2021, which I'm personally excited about. We're going to dig into some of the other fascinating things happening in today's financial world. Real quick, Michael, before we get started, today's video is sponsored by Silver Sands, who is advancing their high-grade Virginia silver project. In Argentina, they actually commenced drilling. I'm hoping to go down and take a look in person myself when things open up there. So we'll have a little more information at the end. And with that said, Michael, pleasure to have you on in here as always, Pento Portfolio Strategies. How are you doing today, sir?
I'm doing fine. Thank you for that wonderful introduction.
Yeah, well, certainly it's a fascinating time in the world. And maybe to start with, a two-parter. A, have you figured out, do we know for sure who is our president? And B, if you do, what are their plans for deficit reduction? I didn't catch that in any of the media coverage.
Well, we don't have to worry about debt and deficits anymore because remember Trump promised us that he was going to pay off the national debt in 4 years. I don't think he quite made it though, did he, Chris? I don't think. Listen, I voted for Trump, so before I get all the emails like, "Oh, you're a Trump hater," no, I voted for the guy. I voted for him twice, so don't hate me. But he did say he was going to pay off the debt, and when you pay off the debt, that means you can't run any deficits. You have to pay off the debt by first eliminating deficits. And the last time I checked, the deficit for fiscal 2020 was over $3 trillion. So we have, looking at the clock, I don't even have to remember. It's over $27 trillion in national debt. And by the way, if you look at the total debt to GDP of the United States, we're at 400% of GDP, an all-time record high. So, nah, I don't think we're going to be paying off the debt we didn't do it with Trump. And I don't think we're going to do it with Joe Biden. So Trump says he wants to spend, he wanted to spend more than the Democrats. So let's see. Through the CARES Act, we spent $3 trillion, Democrats and Republicans together as a country. Then the HEROES Act came up with another $3 trillion. That was reduced to 2.5, but that didn't pass Mitch McConnell's gavel in the Senate. But Trump said he wanted to spend more than the Democrats, the original HEROES Act. But if you get Biden in, which I think, but let's be honest, this is my honest opinion. You can send all the hate mail to me if you want. I'm just going to be honest because all I really care about, I'm agnostic when it comes to, I'm absolutely agnostic when it comes to making money. I just want to make money for my clients. I'm a devout Christian, but I'm an agnostic when it comes to not an atheist or agnostic. I don't care about anything else but making money for my clients. So I'm not talking about agnostic in a religious sense. But if Biden gets in, and I think he will, because if there was a concerted conspiracy to elect Democrats and promote voter fraud across many states across this country, I would think that the perpetrators of the fraud would remember not to lose seats in the House and also to take control of the Senate. They didn't need, much in the way of fraud to get the Senate. So I don't think was there voter fraud? Absolutely. There always is. Was it enough to change the tally of the votes? I don't think so. So I do think Biden is going to be our president. He will have a Republican Senate, which will be controlled by Mitch McConnell, which will not pass a multi-trillion-dollar HEROES Act. So when you talk about, precious metals, one of the things I think about when managing money, one of the top two things on my 20-point model is changes in fiscal and monetary policies. And we are not going to have another big fiscal deficit package anytime soon, especially now when there's two people that claim that they're the president of the United States.
Yeah, well, it's going to be interesting to see how that plays out because, Michael, I guess as I was getting ready for today's call, I was thinking about the debt ceiling limit. Do we even have that anymore? Or was that just permanently tossed aside? I guess it kind of lost its purpose a long time ago.
I think they agreed not to worry about it anymore. Don't
Yeah.
make it an issue anymore. I mean, really, for $27 trillion. I mean, this was the national debt was 10 trillion not too long ago, about 12 years ago. Now we're at $27 trillion and rising at the pace of 15% of GDP per annum. I mean, that's insanity. What worries me more than anything is that whatever ersatz economy that we have right now, it's fake, it's phony, it's all artificial. Bothers me that no one really, I'm saying nobody, but most people don't talk about it. You know, one of the reasons why I got kicked off of CNBS, I think, is because I called the Fed a counterfeiter, and it's exactly what they do. But they're not alone. You know, the ECB and the BOJ, they're all the same. The People's Bank of China, they all do it. You know, what are the limits to money printing when you think about it? Well, we used to link currency to gold. We all on the Bretton Woods system post World War II. Now there are no limits. And what's happening with the Federal Reserve now, in particular, is the mandate continually evolves. In fact, I'm writing a commentary called "The Evolution of the Fed." It'll be out next week. It's not a long commentary. It's just about 1,000 words, maybe. So, but it's a quick evolution of how the Fed went from being the lender of last resort in 1913 to, let's see, the Fed can now, they do yield curve control. They make sure we never have a downtick in the stock market. Of course, that is another step beyond full employment. Stable prices now mean 2%. Oh no, not any longer. Now stable prices mean above 2% for a period of time. I don't know if I mentioned yield curve control. Oh, by the way, the Fed is now an antiviral agent too. The Fed can now cure viruses, pandemics. So, I mean, what's the limit to the Fed's power? They're printing $120 billion a month. But the problem is that, you know, if you worry about the evisceration of the middle class, I do. The backbone of any healthy society is a very strong and prosperous middle class. But without another fiscal package, I don't agree that there should be. I'm saying without one, the helicopter money doesn't go anywhere near people. It just goes to Wall Street. And you wonder why stocks are now 175%. The market cap of equities are 175% of GDP. That is like, you know, somewhere over the rainbow when it comes to valuations. Record high PE ratios, CAPE ratios, price to sales, market cap to GDP. I mean, we're way over our skis. And what worries me is that now the virus, you know, all of the vaccine good news, the best news you could possibly ever hope for is out there when it comes to the vaccine. Now there can only be disappointments, but let's just say, thank God willing, there won't be any disappointments with the vaccine. Well, what does the central bank do next year when the economy starts to heal? And we will not have a booming economy, Chris. We'll have a slowly healing economy because we have a lot of scars that are left over from what happened in 2020. Those scars don't go away quickly. But what happens when the Fed says, you know what, you know, the market cap to GDP is somewhere over the rainbow, as I mentioned, way out into the twilight zone, and we've kept alive zombie companies, and the junk bond market is all on the life support of the Fed. And then the Fed has to say at some point, ooh, boy, I've achieved my inflation target, and the bond yields are rising higher than I want them to rise, and the stock market is going to have a day of reckoning like we have never seen before. It might be more than just a day. It might be a week or a month. And you know what happened in 2000, 2008, 2018, 2020, where you took the window down. So in a matter of days, you were down 30%. I think you could be down 50 to 80% if we really have success with central banks. In other words, if they ever are able to achieve their inflation targets, and those inflation targets are exceeded, you're going to have a major problem with equities. And if you don't have an active management strategy to get in the market when you need to be in the market and out of harm's way when the music stops, you're going to be in a heck of a lot of trouble.
Yeah, well, that's interesting what you mentioned there, Michael, because something I've wondered is that if we see the stock market go down even 2 or 3%, are they ever going to allow the bubble to pop in nominal terms? I mean, it feels almost as if, I mean, they'd have these guys running in their bathrobe at night. They're like, hey, we can't wait till tomorrow morning. Let's get the spigots on. We may end up with a $500 hot dog by that time, but do you think we'll actually see the bubble pop in nominal terms, or maybe just for like a brief period of time, or how do you see that playing out?
Well, I see iterations of deflation and inflation, which is why I created the IDEC model, which is the inflation, deflation, and economic cycle model. So that's been in development since 2012. So it was one of the first people on Wall Street to ever have one. What I think is going to happen is that you're going to have a crash in nominal terms, not just in real terms, in nominal terms in the stock market. But that's going to happen after inflation becomes the salient problem. So you're going to have an issue, like I tried to describe a few minutes ago, when inflation runs to 2.5% the way they measure it, which means it's really running at 8 to 10%. So they measure inflation on the core PCE deflator. Who gives a darn about that? I mean, asset prices will be through the roof, medical costs will be through the roof, college will be through, they already are, but there'll be more through the roof. And then you're going to have a problem in the bond market where the Fed's quantitative easing amount won't be enough to keep bond yields from rising, because Wall Street's going to say, oh, look at the inflation going haywire here. I mean, we have inflation at 2.5 going the way they measure it, 2.5 going to 3, 4, 5%, and the 10-year notes at 0.8. Those two things, they're antithetical. It can't happen. So one of two things are going to happen. Either the Fed's going to sit on its hands and not raise interest rates and continue with QE, which will exacerbate the inflation problem, which will send yields soaring, especially on the stuff that the Fed isn't buying, which, by the way, isn't much anymore. But they're going to have to print even more money to keep yields down, which creates inflation, which sends yields higher. So that's not going to work. Or the Fed's going to have to start raising interest rates and stop quantitative easing. But when you're at 0.8% and yields should be at, 7, there's a little vacuum there, Chris. And that vacuum will suck up the yields. And if you want to be a real estate speculator flipping houses, or if you want to be margined heavily on NASDAQ stocks, when that happens, well, God help you. I mean, you'll be carried out on your stretcher. So that's what I'm really concerned about. And that's what I think eventually where all this is headed. And then, of course, the stock market will crash because of inflation. And that's going to be the most brutal crash of all. I haven't seen anything like that, because what is the Fed going to say? The market's crashing, I should print some money now and buy stocks. Well, don't forget, the problem that works if the problem is deflation and disinflation. If the problem is inflation, you can't fix it. I mean, you can't save your currency from crashing by telling everybody you're going to be printing money and buying stocks. It doesn't work.
Well, we'll see if they try, for sure. And of course, turning over to the gold market, we see a little bit below 1900. By the way, if you have any thoughts, I mean, you can pass on this if you want. We talk quite a bit on these plummets down, which are often accompanied by a large spike in volume. And would you like to share any thoughts or any opinion on that one, Michael?
Yeah, sure. So I warned my investors, this is, if you were to contact any of my viewers, they could verify this. Viewers, my clients. I mean, I talked about something called a vaccine dead zone. I warned about this in like, August, October timeframe, where I said the vaccine news coming out, if it was good, would be very, a bane for gold and silver. And that's exactly what happened. So I think what you're seeing there on that particular drop is the vaccine news. You had the Pfizer vaccine and the Moderna vaccine news, which said that people in the gold mining psyche was, and the gold, the physical gold community said, well, gee, I mean, if we have a vaccine that's effective and safe in 2021, that's less of fiscal policies that are going to be adopted to stimulate the economy, won't be needed. That's less debt for Jerome Powell to monetize. So why do I need to own gold? That's what you're seeing there. Yeah. So, I mean, if the vaccines are very effective and they are very safe, and we see, Powell back away and McConnell doesn't allow anything more than one more few $100 billion stimulus package passed, gold might suffer for a little while. But the problems, that doesn't solve the problems. This is why, you're talking to me. I'm an active trader. I run my company like a hedge fund, even though it's an RIA rubric. So I'm in and out of gold. I mean, I could be short gold, I could be long gold. I do have a steady hoard of physical gold, and I recommend that it never changes for anybody. So 5-10% of your assets should always be. If you don't have any gold, you better get it, because gold is going much higher through the years. But I can't, I don't want to sit here and say, it's like 2012, for example. I don't want to sit here and say, well, hold your gold because 2016 is going to start another bull market. If I can, I'd rather sell the gold, or attenuate the holdings so I can buy more back before the bull market begins. That's what I want to do. But in the long term, we still haven't solved any of our problems. I mean, the problems have been greatly exacerbated. So, for instance, I mean, okay, we talked about the national debt, $27 trillion and rising fast. We talked about corporate debt, $17.5 trillion of corporate and business debt in this country. That's a record high of GDP, and it's up, I believe it's up 75% in the last dozen years. 75% increase in corporate debt. Triple B debt is 50% of investment grade. And investment grade, 50% of investment grade is triple B, which is one notch above junk. We have a record number of zombie companies. 1 in 5 companies in the world is a zombie company, having to raise new capital to pay interest on existing debt. So we haven't solved any of the problems. The problems are worse. We're now back to 0% interest rates. We've addicted the entire economy to ZIRP and QE, record amounts of QE. And asset bubbles have never been more into the twilight zone. So we haven't fixed anything. So that's long-term. Gold and silver are going to do very well, especially gold, in my opinion, because silver has that industrial component. And so when do you want to own silver? You want to own silver when inflation is running hot and it's accompanied with global growth. So perhaps silver will do better than gold in 2021. I haven't said that in a long time. Perhaps it will, as long as the vaccine is very safe and effective. But long term, I think gold, which is actual money, trades like a currency, that is something you have to own. But with a little more intelligent timing is best.
Yep, certainly a tricky market to navigate at times, but Michael, perhaps in wrapping up, can you let folks know about what you do over there at Pento Portfolio Strategies, and if they can contact you and how they can stay posted?
So my website is pentoport.com. You can look at all my media appearances, including Arcadia Economics, my friend Chris. You can also subscribe to my podcast. It's called the Midweek Reality Check. There's a 5-week free trial. It's less than $50 a year if you want to get my thoughts at 36,000 feet. That's as I said, the Midweek Reality Check. The office phone number is 732-772-9500, and my personal email is mpento@pentoport.com.
Well, Michael, I appreciate that. And I love the headline, the antithesis of traditional Wall Street. Michael, you had me at hello. So thank you, my friend. It's great to see you as always. Fascinating year it's been, but it's always great to have you on the show and catch up, see what you're seeing in the markets. We will look forward to doing this again soon, my friend.
God bless. Thank you.